Hello everyone, welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I'm with you with the area of AFM. Now we are heading towards the next and a very important area. Acha, I am just a correction. We have started officially the module D. Acha, what is in the area of module D, everyone? In terms of module D, we are dealing with the topic of taxation. Acha, this particular topic is super duper important. Why do I say this? Because taxation is something which is super important, as this is not only important for your examination of JIIB, but this is super important for your practical life as well, because we all are earning, we all have to pay tax. So when we have to pay tax, we need to understand taxation from that particular point of view. So it's always better that we actually understand this part of taxation in such a way that it is helpful in our practical lives as well. Acha, along with this, everyone, if you like this particular session, please go ahead and share this among your peers, because a little effort from your side would definitely be appreciated, and definitely we're looking forward to it. Done, everyone? Okay, now comes the next point. Let's talk about it. In terms of taxation, where were we? Here comes the first question. For whom is it mandatory to file income tax returns, everyone? Who is it? Only the residents, only the non-residents, or वैसे तो खैर only non-residents is just not possible. For residents, NRIs with gross total income exceeding the threshold, only for companies and firms. Always remember, anyone, there is no specific area. Companies are required to file their returns. Firms are required to file their returns. They don't have a threshold limit there. For residents and NRIs, the gross total income exceeding the threshold is there. This is not for only. The only term is wrong. It is there for all the residents of India as well as the non-residents. Anybody who is crossing the minimum limit. What's the minimum limit, everyone? The minimum limit of taxation is 2,50,000 rupees. Okay? For individual who is below 60. Someone who is above 60 up to 80, they are covered under rupees 3 lakh. And then above 80, they are called senior citizens. I'm sorry. For them, it is 5 lakh rupees. Done, everyone? These are the 3 slabs for individuals who are residents, everyone. This is for you and me because we live in India, you know. Then the people who are not residents of India, then for those non-residents or anybody else, okay, for them the slab is 2,50,000 flat. There is no age benefit for them. The age benefit is only for Indians. Okay? So this is the concept. So in this case, the correct answer is it is for residents and NRIs who are exceeding the threshold limit. Take a moment, everyone, and note this down if you want to, or you can actually download the PDF of the same as well. You can download it you can go ahead and download the app first, and through the app you can review the PDFs of all our classes. So please do the needful, because it is important that whenever we are studying, you are able to do it. Done? Chaliye, now let's move on. The topic was for residents and NRIs with gross total income exceeding the threshold. Now, second point, everyone. In which situations is it mandatory to file income tax returns? When claiming an income tax refund, when carrying forward a loss under the head of income, when having an asset or financial interest outside India, or all of the above. Acha, everyone, mandatory means it is compulsory. For whom it is compulsory to file the returns, everyone? When you are claiming the income tax refund, till the time you don't file your return, how will they come to know that you have paid tax? right? Then when carrying forward a loss under the head of income, whenever you have losses, you have to file your income tax return in time. If you are filing it after the due date, then it's of no use. When having an asset or financial interest outside India, it is compulsory for anybody who's residing in India, though he might be less than the threshold limit, but has some interest in India, interest outside India. They have a foreign property, they have some foreign assets in terms of some deposits or anything outside India. Then you have to file your return. You have to specify your foreign income. ठीक है, be it be something which is taxable and which is not taxable. That's a different scenario. Let the income tax department decide that particular part, right? But overall, when you talk about there are foreign investments now, all the foreign investments have to be stated. It is compulsory. The answer is all of the above. ठीक है. Then comes, when can a person revise their income tax return if the return is found? Everyone, oh, if a mistake is found. Acha. Okay, the first point is anytime during the next financial year, within the next 5 years, or within the prescribed time limit, or after receiving the notice from income tax department. वैसे ना, when we talk about this, when you have a specific return, you have a specified prescribed time limit. First of all, the most important clause is you can revise your return only and only if you have filed your original return in time. If the original return was filed in time, only then this particular return will not have any problem. Okay, but if you found any mistake or the income tax department, then they can describe the limit. Within a limit of within the prescribed time limit, you have to file it up. Okay, so right now the revision or the belated returns, everything is can be done at a certain prescribed limit. The limit has been decreasing over the period of time. It was earlier that whenever you file a return, then you have the time till the 31st March of that assessment year if you want to revise that particular return. But now they have reduced it to 90 days. So that's why, since the amendments are being made in this area every now and then, so they have said that when we talk about this area, it's the prescribed time limit. Which form of income tax return is applicable for the assessment year 21-22, financial year 2021? Actually, na, we have done this. This is from the book itself. Na, they can actually change it from 2022 to 2023. The financial year should be changing as well, because this year the new syllabus has been there, and the Macmillan book can give a different question, because currently the budget is not out. So once the budget is out, they can make amendments. But there hasn't been much of an amendments in terms of the ITR there. So in this case, the answer would be ITR 1 to 7. Okay, when we talk about ITR 1 is for individuals. ITR 2 is also for individuals. ITR 3, 4 is for organizations which are the businessmen is ITR 3. For partnerships, it's ITR 4 and ITR 5. Then ITR 6 is for the companies, and ITR 7 is for the NGOs. So whenever you and I are filing a return, we will be filing ITR 1, or also called ITR Sugam, ITR 1, ITR Sugam, and there was ITR 2. These three ITRs, matlab ITR, this is actually called ITR V Sugam or ITR 1, which is for a person who is only, he has salaries and he also might be having some FTs or something, because you are earning now, then you obviously have some savings as well. So salary plus your additional returns on savings. All those are covered under this. Okay, if you're doing anything for your family, anything which is tax deductible would be also be done. For example, you get your insurance done, you get your children's insurance done, your sons or your daughters or your husband's insurance done. Then what will happen in this case? Your spouses, then they are also considering that part in this particular area in the tax saving. Okay, which is covered under 80C. So they are covering ITR 1 and 2, 1 and 2 specifically for you and me. ITR 2 is for the complex returns, which has multiple income as well. House property hai, then they have bought or sold some kind of land or something. Then for all those people who have complicated sources of income, then it is always better to go for ITR 2. What is the difference between taxable and the accounting income, everyone? Taxable income is the income on which income tax department puts tax, and accounting income is the income which is as per the ROC, that is Registrar of Companies. So in this case, what happens? Because obviously the Companies Act and the Income Tax Act, they don't go hand in hand. This is accrued difference, temporary difference, permanent difference, or taxable difference. See, if the laws are fighting with each other, na, you don't stand anywhere. I don't stand anywhere. Nobody stands anywhere. In this case, nobody can be taking care of anything in this case. This is a permanent difference which cannot be hindered at all. है ना? Think about it, everyone. There is no excuse to it. It's a permanent difference. Next, what is the method used to charge depreciation on the machinery for accounting purpose? Double declining balance method, straight line method, units of production method, or sum of years digit method. In terms of depreciation, somehow only there are many different methods, everyone. These four are not the basic depreciation. So if I look at the different methods given to depreciation, they would vary. Done. So now these are the methods, but when you talk about depreciation, which particular part is recognized in terms of depreciation? Nobody is recognized and derecognized. In this case, when we charge depreciation, they have a flow chart for it. There is a flow chart in which they specify percentages for different assets plus for and for the this is flow chart is related to the area of taxation difference plus in terms of the working. Now depreciation is charged in such a way that the businessmen can in the form of the working, in terms of the businessmen, when they have their own houses and they sell it, that is a part of the asset which is being sold, that is capital gain would be charged on it. And if you're charging capital gain, depreciation is also a levied. Now depreciation is levied because the things are used in the market. You know, we are using it in our business. So if we are using something in the business, then we are bound to charge the depreciation. And pata hai, the depreciation has already been fixed. The depreciation which is fixed by the Income Tax Act 1961 is something which is a slightly different one, because in terms of the income tax which we follow currently follows the same accounting year. Done. So in this case the correct answer is straight line method. Done. In this case the correct answer is actually straight line method. All other methods are not, they are used in accounting but not in this area. Done? Done? Now let's move on to the next question. Okay, then comes the next question, everyone. What's the next question? The next question is, which one of the following statements is not correct? Which one of the following is false? Done? So when we talk about this particular taxes, internet, this is based upon the Indian government followed a specific model of the which of the following is true now? Income tax is a direct tax. Yeah, it is a direct tax. Second point is, income tax is the same for individuals and companies. No, it varies. You and I, we don't have the same. If you're a company and then I'm an individual, and slab goes up, then till then we are at the same level. Then when we talk about the income tax is different in object, in terms of the income tax is different for domestic and Indian foreign. Now when we talk about this particular area, the former for income tax return is different in case of different classes at at different classes of assessees. What would be the answer, everyone? Which of the following is not correct? It is a direct tax, so this is not an indirect tax. What would be the answer, everyone? Because it is a direct tax. In this case, the correct answer is actually, when we talk about income tax. Income tax, what would be the answer, everyone? Which one of the following is not correct? Direct tax, it is a direct tax. It is same for the companies and individuals. No, it's not. What would be the answer? In this case, it is not same for the individuals and companies. It would vary, and domestic and foreign companies cannot be treated as the same thing. In this case, what is not true is income tax is the same as individuals and companies. For you and me, things are not the same. The taxation on one organization and another organization will always vary, everyone. Deduction in respect of donations under such certain funds, charitable institution, etc. is available under ATG, ATCC, ATD and ATU. Deduction which is respected in terms of charitable institutions. Charitable institutions is ATG, ATCC, ATD, or did you know? Then ATD, and then we have ATU. ATG is the one which takes care of the charity working. Okay, so whenever we talk about then in terms of the donations and everything, it is ATG. Done. When we talk about this particular area, when we are talking about specifically in this case, the answer is ATG, everyone. G for uh, ATG for genuineness. when you are being benevolent, you're being helpful towards the people. That is how you can take it. They have certain threshold limits as well, but thankfully in your examination not much has been asked and not much is given in the Macmillan book as well, so you don't really need to worry about it. I think there was a question in the examination regarding ATG as well, so it's an important area to cover. In this case, moving on to the next question, the individuals gets an option to choose between the existing tax rates and the new ones. 100 BAA, 100 BAB, triple B or BAC. When we talk about it, it is 115 BAC. This is the new tax regime which is added. And unfortunately, in the new tax regime, there is no relief of ATC. The tax burden of the new tax version is something which is costlier even. You have to pay more tax for the same amount. Done everyone? This is 115 BAC. Which one of the following statements is correct about deferred tax asset or liability? Deferred means postponed. Done everyone? When we talk about the deferred tax asset and deferred tax liability, when you pay more of tax today, you have to pay less tax tomorrow. It's an asset. If you pay less tax today and you have to pay more tomorrow, it's a liability. Done. Deferred tax assets should be classified as current assets. They are not current. Deferred tax is basically something which is related to the area of liabilities, assets, or the tax liabilities, and deferred tax liabilities should be classified as contingent liabilities. When we talk about the liabilities in terms of the different areas where the deferred tax is applicable, whenever you feel your income tax is more than your profit as per the Companies Act, then switch towards this area. ठीक है ना? When there is a little, first of all, find the differences between the two and specify those differences. Done? Done? In this case, the correct answer is going to be deferred tax assets should not be classified as current assets. This is long term. The benefit or the permanent decline is on the basis of the assets and liabilities where there's a fight between Companies Act and income tax, and it can never be current. It is going to continue as the treatment in both the areas are totally different. Okay, everyone, just the ending of the class. But before I end my session, have you reviewed our courses yet? If you haven't, then please go ahead and check out our courses. What you need to do is go on to the area of Adda 24/7. This is our website www.adda247.com, and this is our profile, everyone. What you can do is check out the area of JAIIB. Okay, just a moment. Now, in the banking area, open up this area, that is JAIIB Bank. Then click on the area of JAIIB Bank. JIB CIB Mahapack is there. You can take up the JIB Mahapack. You can take up the CIB Mahapack. The Mahapacks includes bilingual English medium test series, PDFs of the class, and many more options. Previous classes, current as well as the live classes, everything is open if you take up the Mahapack. So if you are planning to prepare for JIB as well as CIB, take up the JIB CIB Mahapack. And if you feel that you want to prepare only for JIB Mahapack, that is also available. Okay, what you need to do is you just have to click on the area of JIB Mahapack, and then click on the area of buy now. Click on the area of buy now and use the code Y5541 and apply it. You will get 77% discount, or if you're using coins, then you will get 78% discount. And this is available only for a limited period of time, everyone. These courses are being sold, and basically when we talk about this particular courses, these are basically taken up by all those people who are planning to prepare for a long term. Matlab JIB, CIB, bank promotions, they get associated with this specific course, and this is really beneficial for everyone for whom it becomes very difficult and cumbersome to keep on looking at all the different courses. All the courses of Mahapack would be opened up for you, bilingual, English medium, both. So you decide whatever way you are more comfortable with, right? So you can take up and enroll yourself in our classes. So thank you so much